Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go over and look at the last commodity bull market. We're going to compare kind of to today, not completely, but mainly focusing on the last bull market, just to see what kind of pullbacks we had to endure during the last bull market, where it started to take off in relationship to the Fed housing starts, basically which is how many new homes are being built. We're going to look at the commodity to stock ratio. Where does it say that we have a buy point in relationship to housing starts? And what did the stocks look like and the pullbacks look like during the last bull market? So let's jump in. It is 99. So if we look at the commodity to S&P 500 ratio in 1999, that was the bottom of the ratio. So it came down, stopped going down, broke its downtrend, and we should have been buying in 1999. Probably maybe like March, April, something like that of 99. And then it rode all the way higher. The tough part would have been this section in here because it pulled back really hard and then did just a ripping higher in 2008 for a bubble top, blow off top. And this is what 1999, if you were to put a red line about where 99 is. The housing starts were coming on up, and we were at about maybe 1750 or something like that for housing starts. And we're at 1643. We're getting there. We're coming on up. We're going into an expansion phase. It's going to become very apparent, I think, pretty soon. We do have a lot of area under the curve here, which means that we are underbuilt. We are underbuilt by about 4 million homes, which means that this area under the curve needs to be built over the curve, roughly speaking. And it's going to be a big expansion phase of real estate, which should be inflationary. Right now, we have a buy signal being thrown on the commodity to S&P 500 ratio. It's saying buy it. We've got a buy here, and we're throwing a buy signal again, which is, this ratio is very rare in someone's life. You may only see two of them, and that's it. So I think the opportunity is there. Now, 99 is where it threw it. 99 said, yep, it's an expansionary phase. So I'm going to compare this 99-ish time frame to SM Energy. SM Energy in 99 was $4.75. In April 23rd, 99, that's why I put the cursor there. And in 08, it looks like it got to maybe like $70 or something, $65. So it's well over a 10x. But this time around, we got to extreme lows. It was sold off very much down here. And then you could see the large jolt higher. Now, in this area here, in 99, if you had bought 99 here, you could see it jolt higher, very similar to this. This is just an amplified move, because I think that the ratio and valuation was pushed so far down into the dirt that we had this big spring from basically the depths of total undervaluation, I'll call it. But you can see this move higher. We're pulling on back. This guy pulled like the first move higher, and then it's pulling on back here. And then, so we had to endure a pullback in 01 and probably into like 02, 03. It was a deep pullback. And then we started moving higher, and then we got a lot of gains from 04 and onward. We chopped sideways from 06, 07, and then we popped higher in 08. So we went from 475 to maybe $65, $70, something in that range, about $70. That's probably where I would have popped out, called mercy right here if I could time it. And then it ran higher. This would have been one heck of a ride from this point here all the way up to about here, $80 or so. That would have been a huge ride. I'm still riding this guy. I'm holding on. I'm not going to get scared out of, I'm not going to get scared out of my shares, I don't think. And I'm just waiting for this ratio to come back up. and hopefully it comes back up to 6, 7, 8, somewhere in that range. This one's 7.5. This one's 9. This one's probably 8. But I'm waiting for this to come all the way back up, and that could be a very large move for SM Energy if it were to do that. And you can see that we're breaking a lot of downtrends all through here. So there's that one. We've got this one big pullback there, and then we had to endure a sideways move for a while, for a couple years. Here's Norilsk Nickel. This guy had a massive move. I started at 2001 because that's when the data started. 1146 to over $300. That's a massive move. A big gain there. And we're starting to come back up. So we kind of went sideways. We went sideways for a little while, and then it just took off at the end of the bull market of commodities versus stocks. So I think that we're just early to this game here, because if you look, it went sideways for a good while, and then about sometime in 03, it took off. You had to endure a pullback here. This is a pretty big pullback. This pullback all through here. I mean, this could be $50 down here, and we were almost at 100. And then it just took off after that. And I like, I always see this kind of swoop over, and then it comes down like this, and then comes back up. I've seen that before. This one did it too. If you look, it did it right here. Yeah, I see that every once in a while. This is a big move higher, man. Here's BHP Group in 99, $9.63, went all the way to probably about $90. It's a 10-bagger. But it went sideways for the good first portion of the commodity bull market, with one kind of lurch higher from early 99, late 98. It lurched higher, and then it went sideways, and then it really took off. The beginning of this bull market was 2015, 2016 as the bottom. Came up, pull back. It's got this nice big reverse head and shoulders pattern. And we're heading higher, and this could very well move all around. But I think I'm going to ride this guy higher for the entire commodity bull market, hopefully. And this thing also pays a pretty good dividend. So does Norilsk Nickel. Rio Tinto pays a good dividend as well. It's another one I'm riding. Another reverse head and shoulders here. Popped higher. But looking back at the previous cycle in 99, it would have been a very good buy in 99. You just bought it, you hold on for a while, and then it just continued to gain strength over this commodity bull market. But if you bought it here, you rode it up and you came back down, you'd be just moving sideways for a little while. Most people probably would have sold out before they saw this gigantic move come on the back end of this. So this is going to require a bit of patience, but we know that it's cheap. And in 2016 would have been the buy here. Buy it and just hold on and just keep riding it. And that's what I have for the companies. I didn't dig way down into the weeds of all these different companies, but the overall trend are these companies. And you're just going to have to hold on and ride it higher. And we know that the valuations are cheap. We can see it obviously in this one right here, the commodity to S&P 500 ratio. We know it's dirt cheap. So now, what do you do if you know it's cheap? Your options are you buy it and you just hold on. That's what I'm doing. You try trading in and out, and you can mistime things. I like to find the companies I like. I like to position myself. That's my strategy. And then I hold on. We are going to ride through a lot of volatility to get where we want to go. That's just kind of, it comes with this territory. If you're going to make big moves and make large moves to the upside, we're going to have to ride through volatility to get there. Are we going to have a crash in between right now and where the peak is in commodities? I don't know. I don't think anyone's going to know that. We very well could, and we very well might not. It does look pretty weak at the current moment right now in some of the companies. You can see they're pulling back. We're seeing gold pull back. We're seeing copper starting to pull back. The 10-year is still going up, so I don't think that signal's not. I mean, that's a big signal, that signal is not saying that people are running into bonds and it's just diving lower. I think we're just going through a normal pullback. Fingers crossed. I'm not 100% sure. But we know the valuations are cheap. So I'm not going to sell my stuff. I'm just going to hold on. And if it pulls back, I'm going to buy more so long that this stuff remains cheap. And if we see a real sharp sell-off, which I don't know if we're going to see that. I don't think we're going to see like a COVID sell-off, but we could. I'm going to use it as a buying opportunity. I'm not going to get afraid. And yeah, my account's been getting flung all over the place, just like everyone else's. It was up quite a bit, and it pulled back quite a bit. So I'm holding on. I'm just being patient. And, I'm kind of indifferent. I'm very indifferent about the movements in terms of going up or versus down. If it goes down, I have more buying opportunities. If it goes up, I see my account go up. It's a win-win situation, and that's how I try to view it. I know it's very difficult if you haven't seen this stuff, you haven't really seen it, researched it yourself, because you're going to be a lot more afraid than I am. If you know this stuff inside and out, you get very familiar with it. I've written a couple of these from bottom to peak, and the returns have been amazing. I've done it on palladium. I've done it in some of my stocks, and now I'm going to do it with commodities, just because that valuation is so cheap that I don't think we're going to see it this cheap again in our life. Well, maybe one more time. Because from 99 to 2020 is about 20 years. I might be 60 years old the next time I see it this cheap. Or maybe it takes a little while for this to come back up. Maybe I'll be 65. Something on that line. I need to ride just one of these big moves higher. And that's all I need. That's all I need to retire and be done if I choose to do so. And hopefully you guys are remaining confident. Hopefully you're holding on to your shares. If you aren't feeling confident, what I would do is scale back whatever position sizes you have if you can't ride through it. You have to be able to ride through this. Again, I know some people ask questions in the comment section. I am about 20 to 25% physical precious metals. I'm 40% in equities, 20% of that. So about half of my 40%, which is 20%, is in the high risk, it's in the high risk stuff, the high volatility stuff. And then my other portion's in real estate. And it's just stuff that I own. I don't have rentals or anything like that. This is the exposure I have to real estate and that market. I do think real estate's a good bet. I think it's one of the best ways to increase a person's wealth, especially if you have people that you can rent out rooms to. If you're a young person, you can go out, buy a house, rent out the rooms, live in it, and it could be a very cheap monthly cost for you if you've got 3 or 4 people living with you. You charge $600, you're getting $1,800 a month for 3 people at $600. You split some of the utility costs. Your cost is going to be very cheap, depending on how much money you put down. So I think if you're in your early to mid 20s and that's something that interests you, that's probably what I would do. If I could go back and tell myself, I'd say, hey, you know what? Get in a house, rent it to your buddies, and then have them pay it off basically for the first 5 years. And if you want to move after that, you can do whatever you want. So I think that's a pretty smart thing to do when you're a young person. And the best thing the best advice in terms of what I could give myself when I was younger is learn the valuations here, learn the ratios, and then you have to be able to hold on. Once you learn the ratios, once you know what's cheap, once you know where the money flows or not, and then eventually those money flows are going to come back into this sector, you have to be able to hold. And holding, I think for most people, is the hardest thing. You buy companies when they're cheap, and then you hold on. You don't try to go in and out and time it and try to be a hero. That's not how you make money. Making money is really boring. You find what's cheap, you accumulate it, and then you just hold on, and you don't sell it. It's that easy. For real estate, it's the same way. You could probably make a lot of money just going around buying homes and never selling them, and then they just continue to go up, and you can rent them or whatever. The only risk there is the government is getting pretty dicey with renters versus the owners. It seems like they're very in favor of people who rent and then protecting the renters versus the owners, because they had stuff where they weren't paying the owners of the homes, and I could see how they got in some problems. So that wouldn't be a good situation to be in. But I think that's where we're at. We're still cheap. We are incredibly cheap for commodities, and I'm still very interested in them. And I'm looking to buy when the momentum shifts and turns around. And hopefully that's sometime soon. A lot of these look like they're in the consolidation pullback mode, and it's going to take some time. That's what it looks like to me. But remember, it could be any time these things turn and fling higher. So I'm holding on, and hopefully you guys are having the confidence to hold on. But that's up to you. If you guys like this content, give me a thumbs up. Appreciate you guys listening. This is Finding Value.